Hey guys, a bunch of people are asking whether the Fed is pumping up the stock market right now, what to expect with the Fed. And I think this is really funny because I was a delegate in the presidential election for Ron Paul in 2012. I was a community organizer, Sacramento District 12, and nobody even knew what the Fed was before that campaign. And now everybody's talking about how the Fed is blowing up the market and it's crazy. And you can thank Ron Paul for that. Everyone knows that the Fed's printing money now. And everyone's wondering if the Fed is going to blow the stock market up to whatever level. And the answer is smash that like button right now, please, to help me out with the YouTube algorithm. No, I mean, not yet. They could do that. They're not supposed to do that. Um, we'll take a look at a few things and get into it. This is Brian Lewis at MMT Investing, and things just changed. So if we look at the investment grade corporate bonds, this is the LQD. Let's take a look at what happened here. So the stock market crash came down here, did a dead cat, down to a peak and then up to 50% area bull trap. So this is the stock market, and the high yield or the investment grade corporate bonds here did something interesting. They started to come down and then they're all the way back up here. Look at this. So it does look like the Fed is buying up corporate bonds, which is not surprising. And they are not buying stocks directly yet, but they do have the channels in place to do that if they want to. So I wouldn't expect them to do that until maybe the bottom of the second or the third bounce in our cycle. Um, but the main driver for the bull market was not the Fed buying stocks. They have never done that. Actually, I think they did do that in the Great Depression a little bit, but they were not buying stocks during this period, but they were channeling money where it was going to corporations and corporations were using that money for stock buybacks. So this whole Fed blowing up the stock market drive wasn't directly from the Fed. It was just that the Fed liquidity was being used by corporations to do stock buybacks. And it was stock buybacks that drove the stock market, and the stop buybacks have stopped now. So the entire Fed channels that they were using to pump the stock market indirectly uh, are not happening right now. And where the Fed is pumping money right now, because the Fed has pumped almost $2 trillion during this crash so far, and that number is sounds huge, but the estimated amount of dollars that exist outside of the USA and the international Eurodollar banking system, the last estimate I heard was like $37 trillion extra dollars that exist outside of the United States. And this 2 trillion was aimed at companies like Ford that were going under already on the first crash, and corporate bonds, and they're pumping, and they're sending money directly to small businesses and people to try to spur the domestic spending. But the majority of that money, I think, is going to liquidity for the international banks, because that's who's in the crunch right now. This is a 3-month credit contraction cycle. So we're looking at a drawdown, a bounce, and a bounce as a general behavior in this type of cycle, and we're looking for the next move down. So I guess as an investment idea, I don't think that the Fed is pumping up the stock market even indirectly right now. This is just a normal 50% retracement bounce into a bull trap. There's nothing weird about this. And the Fed money, 2 trillion relative to 40 trillion or whatever the number is, globally is not that big. Is not that big. Like it's people think that's a huge number, 2 trillion, but it's not very big. Like the amount of money that gets destroyed in a crash like this, like that's all they're doing is trying to pad the amount of money that's getting destroyed. They're not doing a stimulus smash to the stock market at all. And this corporate bond thing is interesting. Corporate bonds came down and shot back up. So I mean, this type of bond move might be a cool long, like gold here is my favorite move, but corporate bonds or like the lower end corporate bonds, they'll probably start buying those. Might be a good move on this next leg. And I wouldn't short the bond market if the Fed is buying bonds, but I will short the stock market, and I am shorting it right now. I've got mostly tech and some oil on the way down here. I'm looking for the turnover, and the Fed is not pumping up the stock market right now. But if the Fed starts directly buying stocks, which they are not supposed to do, that could send a blast off of a bottom. But they're not going to do that until we get to a bottom. They don't preemptively do that. They do it when things crash and start going out of business. They start buying them to pad the landing. So I mean, they could do that. They could start buying bonds here, or stocks. I mean, they could start buying stocks here. They could start buying stocks on the third bounce. It's possible, but they're not doing it right now, and that doesn't affect this bull trap on the stock market right now. So yeah, a possible long is corporate bonds off a low, not at a high, and that's what the Fed is doing right now. It has a whole lot to do with the international euro-dollar monetary system. The American banks don't look like they're in trouble, but the international banks like Deutsche Bank and HSBC look like they're in a whole lot of trouble. And then the smaller emerging market banks are in even more trouble. So that could be an interesting short idea as well, like emerging market banks and international banks. And that's where the Fed is intervening, so it gets really tricky. So that's just kind of a general outlook of everyone's talking about the stock market and the Fed, and that the stock market is the one place that the Fed is not intervening right now. Like they are intervening in small business, they're intervening in domestic spending, international banks, emerging markets, and they're not intervening in the stock market. The stock buybacks have stopped, and they're not buying stocks right now. So this is not investment advice. You're welcome to go look all this stuff up. And Rabobank is a Dutch bank that gives estimates of the world dollar count. I think the last count was 37 million. You can look Rabobank up and check out their estimates of the euro dollar system and see how many dollars there really are out there, and where this, this 2 trillion isn't as big a number as it sounds, and it's not going where people think it's going. So that is kind of what's going on now. And I don't know if I have. I guess we could look at another bond market, like the high yield maybe. Let's see what's going on over there. Oh, so this is interesting. Yeah, so this did a it dove farther than the stock market dove, and it rebounded higher than the stock market rebounded. So, I mean, these are corporate bonds that the Fed also is probably buying. And look at this gap here. I mean, to me, that is probably Fed jumping in here and doing stuff. I don't know what to think about this shape exactly. That's a huge rip on corporate bonds here for high yield. And I don't know what to expect. I don't know what to expect from any of the bond markets in the next kind of leg, because the Fed is in here intervening in these markets. So I would be very scared shorting any of the corporate bond markets, I guess, as just a general idea. And then maybe they're interesting on the next leg up. Uh, yeah, I guess. Yeah, that's kind of the idea with the Fed intervening. Is more would have to do with corporate bonds than with stocks and like the S&P. So, yep. Okay. Hopefully that was helpful. A look at what the Fed is actually doing and the actual numbers, how they compare with each other, and hopefully less fear about the Fed. But I'm glad that people actually know what the Fed is now. That's cool. And there is actually information about the world financial system, like estimates on numbers. Like we never had anything like that before. Nobody had any idea how much money was out there. Like Congress has no idea. Congress asks the Fed all the time, like how much money there is and where they're sending it, and the Fed's just like, no, we're not telling you where numbers or where it's going, nothing. Like we don't have to tell you, and we're not going to. So just being able to see some of these numbers is kind of cool. And and yeah, I'm not shorting corporate bonds. I'll tell you that much. Happy trading.